Peter Schiff warns now, we are all in trouble. Peter Schiff, the CEO and top international strategist of Euro-Pacific Capital, warns inflation is the biggest threat to the U.S. economy, and the impact it will have on the American family will be devastating. He explains in detail the sneaky way the United States government taxes you and how this is the biggest threat to the economy and people's savings. Hi, allow me to welcome you to another video of Finance Sense. We cover all the latest trends in the financial markets and the economy. Make sure to leave a like, subscribe if you're new to our channel, and turn on the notification bell to keep posted. With that being said, let's start. Peter Schiff posed the question, why are we all experiencing inflation today? After which he said, well, there's only one explanation for why everyone is suffering from inflation, and it's because of the government. The government causes inflation. It is essentially a product of the government. In reality, it's just a devious way for the government to tax the population. By definition, inflation is the expansion in the amount of money in circulation. Most of the time, people assume it has to do with prices, but you can't expand prices. The money supply is what expands, but as you increase the amount of money available, its value declines. Additionally, purchasing goods and services now costs more money. In order to reflect the extra money, the price of such goods and services increases. Schiff contends that the inflation the government creates is the only factor contributing to the price increase. Although the Federal Reserve is increasing the amount of money in circulation, when the government writes checks without collecting taxes, it actually spends that money supply in circulation. Schiff remarked, you have these enormous budget deficits. Where does the government obtain so much of its spending money if it is not collecting taxes? The government clearly does not want the public to realize that inflation is caused by the government, since they may object because it is a form of tax. They try to pin the blame for inflation on the general public, greedy corporations taking advantage of consumers, OPEC for driving up oil prices, and speculators for trading in commodities. In the end, the government wants to blame everyone else but itself. And according to Schiff, inflation may occasionally be a problem since it stops prices from dropping rather than increasing them. Because you are unaware of how much lower your cost of living would have been without government-induced inflation, we don't truly perceive the negative impacts of inflation. As Schiff sees it, the beauty of capitalism is that it is a driving force toward abundance, producing efficiencies and economies of scale. Typically, in a capitalist system, when prices for goods and services decline, our quality of living rises as a result of our ability to afford more items. But when the government generates inflation, it often prevents these beneficial price drops from occurring. But we don't protest since we're unaware of the advantage that we never experienced. Prices increase by 2% when they should have decreased by 5%. The government will report 2% inflation, but this is not the case. The inflation rate is 7%. The government artificially increased the money supply, which resulted in prices being 7% higher than they otherwise would have been. So how does the government use inflation to tax people? Schiff responded by stating that there are two methods for the government to obtain the money it needs to spend. One is an honest method, taxation, in which the government systematically deducts money from people's wages to reduce their disposable income, or they may convince individuals to lend them the money. In this case, we give the government the money we would have spent on ourselves, and it uses that money to finance its activities. Now, this reflects a claim on future taxpayers, who will ultimately have to pay taxes to the government in order for the government to repay the people for the money it borrowed. However, whether through taxation or legal borrowing, money is transferred from the private sector to the government and then returned to the private sector. Therefore, there is no net growth in the money supply, but there is a net decrease in the people's personal money supply, as the public's money provided to the government cannot be spent by the people themselves. According to Schiff, the government may also fund its expenses by simply creating money, which it then distributes to someone else to use for spending. However, when that occurs, the government steals the people's purchasing power rather than their money, because those who receive the newly created money are now using it to purchase goods and services. They compete with each other to buy products and services, which raises the cost of such commodities. According to Schiff, the additional cost is essentially a tax. Let's assume that taxes account for 10% of your income. Now that you only have 90% of your money, you must cut back on your spending by 10%, which leads you to make fewer purchases. However, if the government just prints out the equivalent of 10% of your money and gives it to someone else, who then goes out and purchases goods and services, the cost of those goods and services will increase by 10%. As a result, you now need to cut back on your spending by the same 10% because you don't have unlimited funds and prices have increased. Thus, whether the government gets your money or your purchasing power, you arrive at the same destination. The difference, according to Schiff, is that you already know who is to blame when the government steals your money. But when they take your money through inflation, you are puzzled, especially when the government is deceiving the public about the causes of price increases or acting as though they aren't happening by utilizing the CPI, which doesn't even accurately reflect the actual level of price increases. If you trust the government, you aren't even aware that they are rising. However, you are aware that your standard of living is declining due to your reduced ability to purchase as many items with your money. However, you are not criticizing the government or venting your anger at the polls since that is not what the politicians want to hear. Voters dislike paying greater taxes. Thus, politicians don't want to raise taxes either. However, if they take their purchasing power through inflation, the voters are unaware that they are being robbed and may continue to vote for those who are stealing them. When Peter Schiff was a senior at Princeton, a young boy named Jay Powell lived across the hall from him. He is now the Federal Reserve Chairman and in charge of the economy. If the government seeks to borrow trillions of dollars, Schiff asked, how can he declare with a straight face that inflation is transitory? However, while he no longer uses the term transitory, he still anticipates a decline in inflation. However, if you look at the Fed's prediction for interest rates, the Fed still expects that rates will be under 2% by the end of 2023. Schiff then remarked, how could rates be so low if the Fed is genuinely devoted to combating inflation? Because even if you accept the government's way of measuring prices, prices are now increasing by 7%. So how are you going to combat the 7% inflation rate when your interest rates are below 2%? According to Schiff, if inflation reaches 7%, interest rates should be about 8 to 9%. Without real positive interest rates, it will be impossible to combat inflation. Powell is still significantly behind the inflation curve. That curve is already accelerating and will undoubtedly continue to do so as the amount of the deficits increases. In order to monetize it, the Fed is then forced to print more money. Now, the Fed is not legally required to do it. In fact, it should refuse to do so, as this is what the Federal Reserve is meant to do. Unfortunately, the Fed follows Congress's orders and is delighted to monetize whatever deficits Congress runs. In reality, the Fed is pushing the government to incur greater deficits in order to monetize them. Therefore, avoid thinking about cash in terms of yield, as you won't receive any. Schiff argued that you should think of it as offering you some flexibility since you could take the money. If the market collapses and you can profit from it, you can purchase stocks at a discount. Additionally, Schiff advised using gold rather than cash because the inflation rate is 7.5%. If you keep your money in cash while looking for deals in the stock market, you're losing 7.5%. Furthermore, waiting a whole year results in a 7.5% decrease in your purchasing power. Schiff suggested putting your money in gold rather than cash. Schiff went on to say that gold is a much better investment if you don't want to own stocks because it offers the same degree of flexibility, and you can use it to purchase stocks. In fact, according to Schiff, it provides you more flexibility since, at the very least, gold prices will increase as stock prices decline to counteract that 7.5% inflation. Hi, it looks like you've reached the end of this video. Thank you for watching this far. Please subscribe and give a like if you enjoyed it, and comment your thoughts in the comment section below. This is Finance Sense, helping you keep up with all the latest trends in the financial markets and the economy. See you around!